Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, January 17th, 2024, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we are 1 week away from our riskiest episode ever. And so in this episode, we are going to look back on those predictions from the SEC's approval of those spot Bitcoin ETFs, because we are 1 week in to trading those, and we'll kind of talk about the different aspects that we discussed in that previous episode. Also put a link up above if you want to hop back and refresh that and see how risky this actually panned out and how close some of our hot takes were. Because remember, we recorded that episode after the SEC's approval, but before a single trade had actually been made on the public markets. So it was kind of an interesting thing. We didn't really know where it was going to go, and now we know. So we're going to touch on that. And along with that new product out there, Viper is going to go down into the experimental mines and try a new experiment that he is actually starting to kick off tonight. I believe it will mostly go into orders tomorrow, but we'll get that from Viper and see what kind of experiment he's got cooking. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, several other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. You can also go to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, you can pick this up in an audio-only format wherever you get your podcasts. And if you can't find it there, let us know and we will get it there. But let's hop to this week's content. Viper, we are 1 week in, and you are our senior crypto correspondent here at Blockhead Traders. And just really curious, where do we stand on some of the way the price action unfolded? We had talked about, is everybody going to buy the rumor, sell the news? Is it going to be a run for the hills? Are we going to slide down? Are we going to get a big pile in of all these people who wanted to touch the product and get into the ordering of it? What's your take on this? I think you've followed this a little bit more closely than myself.
There's a lot to unpack, so we'll try to condense it down a little bit and not go too overboard with all the details. But a very high level view, I would say I am very satisfied. I think our episode aged very well. We certainly highlighted some of the more extreme ends of what could happen, but I feel like we kind of both consolidated and centered around a more realistic approach. I know that I didn't go back and watch it again to remind myself, but I know that I left some seedlings of just in case it does blow up. Though I talked about the unprecedented nature of this as far as buy the rumor, sell the news, and the fact that people are now able to buy the news that weren't able to buy the rumor because they now have access and all that sort of stuff. So I left a little seedling there of I could be right in any situation. But
smart.
Yeah, right. That's how you do it, folks. But I really did feel like, we kind of really drilled the point that long term, on a very long time horizon, this is nothing but great news for the mainstream nature and the cash flows that this opens up and all that kind of stuff. In short term, I think we were pretty tempered as far as there's a on the probability scale, there's a small probability of something that could go wild, but there's also the very realistic probability that it's not as crazy as we think. So with that said, it was so far pretty much right along those realistic lines, and I think it really upheld what we always say, that news is noise and news is just an accelerator of price action, binary news events, all that kind of stuff. So I actually charted this out a little bit to kind of show here. So I've rewound the chart because I wanted to show this chart is rewound to Monday, January 8th. And I rewound it to this particular date because on Monday, January 8th, somebody from the community had, we were just chatting. And they were like, what do you think? Like you do all kinds of charts and stuff. Like, what do you think is going to happen with the ETF approval? And are we just going to go crazy and all this, yada, 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 yada. And so I sat down with the chart here and like gave it an honest thought. And the white ranges here, I'm not going to go into how I derived those, but those were derived from the weekly chart. So these are weekly important ranges. And so basically I kind of drew this green arrow and I was like, honestly, like we've cleared above this weekly range. We're coming off of a local high here. We're coming back to the top of the range. There was a whole lot more analysis that I did down here of the price action in the range, but the point was, the most probable move at this point, regardless of any news event, is to go test the bottom side of this next range and then get some sort of potential retrace pullback of it. And this is just standard TA. This is standard swing trading, where you identify the swing. If you were taking this trade, you would, take the trade entry here with a tight stop loss here, and you're just playing for this swing with a PT up here at the bottom of this range, because you can always blow through the range, but whatever. So that was my estimation of, I think this is the most probable. I mean, this is a pretty steep retrace. That's certainly not ideal, but nonetheless, that was the idea. And these yellow arrows were just saying, hey, these are currently off the table as of that Monday. This was just saying if we lose this range, these are the two probable moves. Obviously, the first one first. And if we lose this range, then we go test the top of this range and all that kind of stuff. So that's what all this was. And now jumping forward to real time here, we see what happened. And there's ETF approval. I'll zoom in here for a second now. So the 11th, this big old wick move here was our day, right here on the 11th. So that was it. That was the price action. We got this just like that. We got this big 4-hour wick candle here. We went up, we touched near the bottom of that range. And honestly, I'm kicking myself a little bit. This is all hindsight stuff, and this is certainly, none of this is to say, oh, I called it, look at that. Yeah. I didn't take this trade. I didn't take either of these trades. The trade to go up here, or acknowledging that we could potentially get a pullback here and the potential for sell the news and all that kind of stuff. This was a really juicy short opportunity, and I did not take that either. And that just goes into the psychology of confidence in your charting and all that kind of stuff. But my main point here is this is a huge wick. And we're looking at the 4-hour chart, and that's not bad. It happened fast, and we had an accelerator event. We had the ETF approval news and all that kind of stuff. So my main point here is the PA did what the PA potentially was going to do. And I mean, it did retrace further than I expected. But to say none of this is out of the ordinary, like none of this you look at and you're like, what the heck happened? This thing blew out crazy. That was unpredictable. It just held the line as far as what the PA says it'll do. So on that alone, I would say this was very middle of the road. This was very, that's realistic. There was no crazy, we're going to $100,000 per Bitcoin and all that kind of stuff. That talk, I think, has validity. Again, on that longer time frame, I mean, this is an opening of cash flow valves. It's just not going to flood in all at once. There was insane volume on these traded products, but obviously the market held it up just fine.
Yeah, and then that could really speak to, I know we kind of talked about the whole buy the rumor, sell the news, right? And there had been a big run-up in stuff leading into this. Now, it's not the actual ETF product, right? It was a big run-up on the underlying asset of Bitcoin itself, right? So you had a lot of people kind of doing that. And You could very well have been, tempering some of that stuff with your inflow of buyers. I know it's a little bit of a disconnected product, right? Because it's not directly trading on that commodity, but you could have had your sellers in the Bitcoin asset physically selling, kind of, holding down, but then you've got this inflow of money coming into the ETF, which then has to turn around and buy the spot on the back end for some of that. And so you've got this kind of push and pull that is kind of normalizing, and that's the beauty of modern and efficient markets.
Yeah, I agree, because we did talk about that a little bit as far as the potential to not dump massively because of the sell pressure, exactly like you just outlaid, as far as people that are selling into many more hands that are trying to buy, and potentially buying smaller amounts than people are selling. So yeah, I agree. It's the fact that the chart came out so natural, quote unquote, regardless, and the high volume certainly indicates, like you said, that this was moving a lot. And so, yeah, it shows the capital, the efficiency of the markets, and just market dynamics, market psychology in general, that, I don't know, there's a lot that I would encourage people to think on, as far as, that news is noise, because I will tell you, if you go deep into the crypto Twitter and all that kind of stuff, that, oh man, the emotions, holy cow. It's like everything is, it's going to zero or it's going to a million. Like, it's just this constant binary, like it's everything, it's nothing. And like, guys, there's more to it than just your emotions. And events like this, I think, are good to harp on, just to really showcase that the market's just going to be the market with or without you. So that's all the spot world. And that's also a little teaser into my experiment coming up later. But what about the options world? Because we touched on that towards the end of the last episode, and I know that is now the new trending narrative amongst, we'll call them the more serious investors amongst the crypto Twitter sphere. Everybody has all eyes on the options chain and when that is going to unlock. There's a lot of people that think it's going to be really good. That, we talked about the whole liquidity of the options chain and how ETFs in general, not that great for premium selling and some of those strategies. So there's a lot of anticipation. I don't know, since that's more your jam, Sprocket, if you have any insight into things you've seen, or just thoughts or expectations you have around when we're going to start premium selling on this.
Yeah, no, definitely. We touched on it last week a little bit, and it's definitely something I was excited about. But I know from the introduction of other IPOs and things like that, that the likelihood of seeing options in the first week just wasn't really highly likely. Most of the time when I've noticed a new IPO, you typically don't get options on that thing for 1 week to several weeks later. And I never really much paid attention to what causes this, why is something there, or this, that, and the other. So in this particular case, I was curious, because I do think there's a high probability this will lend itself well to an options chain once one is available. And so I started kind of looking around to, is one coming? And it does look like one has been proposed from a few different areas. And the way that you get the options chain available, and this probably explains why in some cases it comes fast, in some cases it comes slower, is much like every other publicly traded financial product, it has to go through an SEC approval filing. And I believe that since an options is a derivative product, you can't very well file for a derivative product if the product that you're a derivative of doesn't exist yet. So you really couldn't start that process until there were ETFs out there on the market to say, hey, I want to make a derivative product of this thing. So last week, appears that most of them were probably on Friday, although there could have maybe been a filing on Thursday that I didn't see about. There's a few different filings with the SEC for approval to run derivatives on these ETFs on option chain. And I looked in a little bit to this particular form that has to be filed for this approval to say, yeah, is this what, how long does this thing take? And there's a lot of speculation around it. It looks like this form has a, by default, 60-day deadline given to the SEC. So the SEC basically has 60 days to do something with the filing. And it's up to them whether or not they want to do it quickly, maybe process it in the queue. This is what I mean when I said in past IPOs, there's the time period that I'm like, I don't know. Sometimes they show up in a week. Sometimes they show up in 4 weeks. And I think that's really up to the discretion of the SEC. How busy are they? What are they working on? How enthusiastic do they want to get it through? Do they have lots of questions with the filing? I think that varies that approach. Now, there are other posts online that basically say, speculate the SEC doesn't want to approve this. They took so long with the ETFs. There's a series of things they can do to extend that initial 60 days. So they said, yeah, this could be like September, October before we hear anything. I don't really know, but I do know that I am going to keep an eye on it, because once those are out there, it's something I will take a look at on an options chain and profitability. I will say I did find one interesting thing as I was kind of looking through there, because I just wanted to confirm none of them had options chains. So I was putting all the different tickers of the ones that were approved, and pretty much everything has, 1 day, 2 day, 3 day, 4 day history on there, except Viper. I came across the Grayscale ETF, which is a spot ETF, but when I pulled it up, my charts filled out the past like 52 weeks. I don't know if it goes back further than 52 weeks, but I kind of did a double take on that, and I was like, what? How does this thing have a chart that goes back in time when this thing wasn't really a spot ETF until last week? So I posed that question to you, Viper. What did you learn?
Yeah. So you can see here, I pulled up the GBTC chart. And indeed, like you said, May 2015 was around the inception of the GBTC Grayscale Bitcoin Trust. So that because I saw the same thing, I bumped into these Grayscale products a month or so, not even, maybe 2 months ago, because I had a similar moment of, what the heck is this? Like, wait a second, this is an ETF, this is an equity, and there's a whole bunch of them, usually starting with the letter G for Grayscale, but there's a G Link, there's a GBAT, which is another cryptocurrency. There's a whole bunch of them. And I was like, what is going on? Like, I thought that, these spot ETFs or whatever, that none of this was approved yet. And so basically it turns out, and I'm not in any case speaking as any super knowledgeable authority on the matter, but as I understand it, Grayscale has offered accredited investors, and that's a term that comes up a whole lot in a lot of different equities and SEC filings and rules and things like that, IPOs, that Grayscale has offered a product to accredited investors for a long time now of a lot of different crypto exposures. And it's in the OTC market, which is over the counter. We've talked a little bit about that in our little bank run-ins in the past. And the OTC market is not tradable on the NYSE. And in this particular, so the OTC market, as far as the bank shares that we had, we could still trade that, and it just, your liquidity is really low and your orders get serviced at weird times. In this particular case, this is an OTC product and only to accredited investors. So very specific. Well, I don't even know what the criteria is. Vetted, large institutions, whatever, have access to these products. And they've been, essentially, they've been trading crypto for a long time. And there's probably stuff we should unpack there in our mental process as far as the reaction to the public spot ETF of Bitcoin being approved, is that there's a lot of institutions that have already been exposed to the underlying asset in a spot form, via these accredited investor products and whatnot. So Grayscale has a whole bunch of them. GBTC was that one. And then just a couple days before the approval. It was filed longer than that, but Grayscale basically proposed or filed to the SEC to say, hey, we want to upscale, or I forget the official word, it's upcycle, whatever, from the OTC market to the NYSE for the GBTC ticker, and that's what we want to offer our spot ETF on. So now it is still the GBTC, but it is now publicly available via the NYSE. Alphabet soup for you.
Yeah. Speaking of alphabet soup, I do have to point out there are, I don't know if it's like, hey, where you fell in line on there, but there are some pretty cool tickers that are basically representative of these. My ones that stuck out of my brain is one of the ETFs ticker is HODL. I thought that was a great one. And then there's another ticker that is EZBC. I thought those were both really pretty clever.
Yeah, so again, a little teaser into my experiment that we'll go into a little bit later. You want to hear my favorite one?
Sure.
BRRR.
Oh, I wanted to do that one too, like brr, but that was pretty funny.
So with that said, obviously BRR and HODL and all those, it kind of begs the question, how do you choose? Why do you choose? What do you choose? There's currently 11 of these on the market and available right now. So we touched on that last week, and I wanted to dig into that a little bit more because I started to dig into it. And this was part of the episode that aged perfectly, but that's not a surprise because it was just knowing. I mean, it goes back to what we often say as far as know what you're investing in, know what's behind it, know the mechanics at play, and then you'll know what questions to ask. And so in this particular case, we talked last week about these ETF products and the prospectuses that outline everything. And this is, again, a positive side effect of a highly regulated market as far as nothing can be hidden from the investor. It is all part of the lengthy SEC approval process. So I wanted to pull up one of the prospectuses. In this particular case, it is the ARK B ETF. That's the ARK Invest Bitcoin Trust ETF. And this was just, I didn't pull it up for any specific reason other than it was the one that I could think of off the top of my head, despite Burr. So I just wanted to walk through real quick because this is a heavy duty document, and this whole like DYOR, do your own research and know what you're investing in. Like, you're also not going to read a 136 page document. I mean, just that's a lot. So in this particular case, as it relates to a crypto asset underlying of a spot ETF, the number one thing that we want to check on and know what is happening behind the scenes is what we talked about last week, is the custodianship of the assets. How does this work from buying a share, and how does that translate into buying Bitcoin to back the share, exactly like a spot ETF is supposed to do in this case? So the way I dug into these prospectuses is pretty simple. I just came in here and I searched custodian. I said, let's just start seeing here. I want to know who's holding it, who is the custodian, because in almost every case, and I don't know if this is a regulatory rule thing or if it's just everybody staying in their lanes, but whoever is offering the ETF, ARK, Grayscale, all of those, they're never the ones to manage the assets behind the scenes. They're gonna farm that out to appropriate parties. So custodianship is really important, and it's really important. We harp on it all the time. Every time we talk about the crypto world and blockchain world and all that kind of stuff. So pretty simple. Let's search the document for custodian and just kind of scan through here. I've already done that and highlighted a couple areas I wanted to call out. So the first one here, we see this statement here. The Bitcoin custodian is not Federal Deposit Insurance Corporation. aka FDIC insured, but carries insurance provided by private insurance carriers. The trust will not invest in derivatives. The sponsor believes that the shares are designed to provide investors with a cost-effective and convenient way to invest in Bitcoin without purchasing, holding, or trading Bitcoin directly. So there's our first, none of these are, we're not gonna call any of these red flags, but they're just very important pieces of information. I think I already skipped over it. Or no, it's actually right here. The trust will custody its Bitcoin at a regulated third-party custodian, Coinbase Custody Trust Company. So ARK Invest is one of the many that use Coinbase as their custodian for their assets, for the Bitcoin. And then obviously all this is saying down here is, hey, just a heads up, Coinbase is not FDIC insured for everything that we're utilizing them for in this process. So that's important to know, FDIC insurance and all that kind of stuff. Then if we keep going, there were a couple other areas I wanted to call out. Down here we see all Bitcoin will be held by the Bitcoin custodian. The transfer agent, as defined below, will facilitate the processing of purchase and sale orders in baskets to and from the trust. So that might sound a little random, but it was called out. I thought it was interesting because one of the conversations I've been having a lot with people in the space is, you always want to have an edge, and the problem is a lot of people want to see an edge where one doesn't exist. So in this particular case, one of the very popular rumors that started percolating in the wake of these ETF approvals was, hey, hang on a second. When you buy a share, it's not going to immediately buy the Bitcoin. So that must mean, and this is where they take a big logical jump and they say, well, that must mean that at bell closing, all of these orders are going to get processed and the price of Bitcoin is going to shoot up or dump. So we need to watch, at closing, open a 1,000x leverage trade or whatever. And I mean, aside from sensationalizing a little bit there at the end, the thought process was sound. It was, okay, well, how is this going to work under the hood? When will the Bitcoin be purchased, and will it be done at a specified point in time? And, is there an opportunity there to take advantage of? And this doesn't directly say it. One of the other prospectuses said it a little bit more explicitly, but this reference to baskets was the same, and I predict and expect it would be the same in all the ETFs. But basically, you have the trust, and you have this transfer agent, which sits in the middle, and you have the custodian on the end. And it's just this symbiotic relationship between all of them. The trust is collecting orders. The trust is then issuing to the transfer agent, hey, I have these orders that need filled. And the transfer agent works with the custodian, and they do this whole dance to get the shares settled into the underlying asset. And long story short, at least in, I think it was the Grayscale one, it was basically, these are baskets of, I think, around $1 million worth of Bitcoin that they try to fill up the basket before executing the trade. And that's a lot of, just efficiency of the transaction and things like that to do that. Because, at that point, $1 million worth of Bitcoin is, I don't know, 9, 10, 11 Bitcoin, somewhere around there. But nonetheless, this was in reference to that, just basically saying, hey, we're going to let the transfer agent facilitate that processing of the purchase and sale of those baskets. Then moving down, it gets into the Bitcoin custodian. There's some information there. And then the last thing that I wanted to call out as we keep cruising down through here this was not the last thing, but although the Bitcoin custodian carries insurance, the Bitcoin custodian's insurance does not cover any loss in value to Bitcoin and only covers losses caused by certain events such as fraud or theft. And in such covered events, it is unlikely the insurance would cover the full amount of any loss incurred by the trust. So that seems that seems important to know. We're basically saying,
well, we got this insurance. It's going to cover stuff, but it probably will never cover everything. So
Yeah, exactly. And I mean, to be fair, I haven't dug through to be like, are you at least telling us what amount the insurance coverage is? But honestly, that's probably not part of the prospectus. That's probably part of Coinbase's, and I don't even know if they need to report that. But like you just said, it's basically saying, hey, by the way, even though it's not FDIC insured, it's partially insured. But honestly, if there's a big theft, I'm probably going to lose some of it and just not get it back. And it's just gone. So again, not necessarily a red flag, but just one of those realities of the situation. And now I believe the last one here is the one that I'm not going to break down all of these, but this was really good to see because we talked about this very explicitly last week. So this is just saying, where is the Bitcoin held? So in this particular case, Bitcoin may be held across multiple wallets, any of which will feature the following safety and security measures to be implemented by the Bitcoin custodian, Coinbase. Cold storage, and then there's a whole section here very much worth reading on how they're managing their cold storage of the Bitcoin. Then there's multiple private keys, and then there's a section on how they're handling the private keys of the storage where the Bitcoin is stored, and then this whitelisting and transactions only being sent to vetted known addresses. Very important section here. And audit trails. Audit trails exist for all movement of Bitcoin within Bitcoin custodian-controlled Bitcoin wallets and are audited annually for accuracy and completeness by an independent external audit firm. So this is basically saying, obviously, yes, on chain, we all can see the transaction history, but here within the walls of Coinbase, where publicly you don't normally get to see, supposedly there is this audit trail, which is audited, in this case, annually for accuracy and completeness. And that's just to make sure that Coinbase is doing what they said and promised they would do with the Bitcoin tokens, and they're not misusing them and mixing customer assets and all that kind of stuff that we've seen from SEC court filings as problematic in some cases. So, I mean, that's a 136-page document kind of whittled down to what I think are some of the very most important key aspects based on what we talked about last week, which was know the underlying. We know that this is a on-chain asset. We know that custodianship is involved. We know private keys are involved. We know cold storage is involved, hot wallets. One of the other prospectuses talked about how they manage the cold wallet and the hot wallet and how those go together. And so this was all very important information to review, to make sure, I can't tell you whether or not it's going to be a deal breaker for you, but it's all part of that process of things you need to understand that you're walking into on these products, in addition to the volatility of the price of it. But it's not just picking on Bitcoin ETFs or anything. This kind of thing exists on all ETFs, that know what's behind it, know what the ETF represents, and then dig into how is it managed and all that good stuff. And that's part of the process.
Yeah, you mentioned several times it's not a red flag. It's not a red flag, and that's true. It might not be a red flag for you, but I equate a lot of this prospectus to, you go out to buy a new car. You want to go buy a house, right? You're looking for certain feature sets. You're looking for certain things. And this prospectus is really about that detail of, hey, this is how this is constructed. These are the bits and the pieces and all of that fun stuff. And so, it's could be a red flag for you, might be fine with somebody else, because it's all about, what thing do you need? And speaking of things that are right for you, the trader, Viper, you decided to kick off a little bit of an experiment because there's 11 of these things released out there in the wild. Theoretically, I think they all are supposed to track the actual price of Bitcoin, at least in principle. Now, of course, I didn't read all 11 prospectuses to figure out how they do it. But much like a vehicle gets you from point A to point B, they probably all will get you from point A to point B, but there's different things about them that might vary. And you decided, instead of taking one for a test drive, you wanted to test drive more than one. Talk to me about your experiment.
Yeah. So we're parking it at the dealership and just running through the lot. We're turning into car and driver reviews here. um, so, like you said, there's 11 of these things out there, and also, like you said, in theory, they should all track, perfectly together. They should all track Bitcoin price movement perfectly as well. But one of the things that got me thinking was back when I did a similar experiment with the futures Bitcoin ETF, which has been publicly tradable for a long while now. I thought it was interesting when you read the prospectus of the futures Bitcoin ETF that it specifically said the goal of that ETF was just to track 1 day of Bitcoin. And so from day to day to day, they were not promising to get the same rate of return as Bitcoin over that same extended time frame. They were just saying within one intraday of price movement, we're gonna do our best to track that. And so I did a little experiment back then, and it largely panned out that it didn't track as accurately over multiple days, but that's fine. They didn't promise to do that. Intraday, it certainly was within the range, of acceptable tolerance. But the fact that that was called out so specifically in that particular product made me think, well, let's test these. So the long and the short of it is I've gone ahead and put orders to process tomorrow morning on market open to put $100 into each of the 11 Bitcoin spot ETFs. And then I'm just going to let them go for X amount of time. And I don't know, anywhere 2 to 4 weeks, probably good. Maybe on the side of a month, 4 weeks or so. And the goal is to just chart it all out. Like, I mean, I'll stick to it and, have a nice little readout at the end of it. But what I'm watching is, like, let's say in that 1 month time frame, the price of Bitcoin moved 25%. I would expect every single ETF to also have moved 25%, and we'll give them a margin of error to some degree. And relative to each other, they should all track the same. So this could be the world's most boring experiment, or it could reveal, hey, you know what? Those guys at Fidelity, they actually nailed it. And, over at ARK Invest, they did not. And, if they came up a large delta difference, say on a 25% move over that time frame, they pulled off 15%. Like, that's significant, and something is amiss in the management, and I mean, I'm just off the top of my head thinking how or what that could be, which is you have this process from orders to the transfer agent to the custodian that, I mean, it's interesting. It's potentially a test of the efficiency of that system that you're able to manage and do this how you will. But in that, I also will need to dig out the actual fees for each of these products. I know, at least for now, I believe the Grayscale is really, really hefty on its fees. I think it's still running like a 1.5% fee on it, and I feel like that's a holdover from when this
1.5%. Holy cow!
I feel like that's a holdover from when this was the old product and they needed to update it, or they were just like, hey, we got all this institutional money already here. We're not going anywhere. We've been raking in these fees for, almost 10 years now. So whatever. But I know that at least on opening day, they still had like a 1.5% fee on there, while everybody else was fighting out at 0.25 to 0.35%, which again, in the world of ETFs is still crazy expensive. So I will also need to chart that out as well as to where the fees are at, as best I can, because I imagine some of them might change. I don't know how frequently they can change it, but it seems like 0.25%, somewhere around there, seems to be the competitive edge. But again, I guess it depends on what audience they're tailoring to. So that's the experiment. We'll see how it goes. Could be boring, could be interesting. And I guess I would say, because I do want to add some other accounts, a portion of a retirement account or things like that into these products. So I am also using this data as part of that, of just, which one of these perform the best. And then maybe that's the one that I carve out a little corner for.
Yeah, that sounds like a pretty interesting experiment. I'll put my speculation out there in the hat of speculation that this is going to be super boring, and all you're really going to realize is, wow, this is when you have fees. This is where they go, because we'll track that with there. I think that's an important thing that I think a lot of investors maybe get lost a little bit. Is you're like, oh, it's just 0.25% of whatever. When you trade things in retirement account, or you're like, well, these guys are super smart, so I'm going to pay them their 1% fee or whatever. And and really, what are they doing? And how does that stack up? I speculate that's going to be the big differentiator here. But this is why we do these things, because we can hypothesize, but the data will show the results here in a few weeks. So I look forward to that, Viper. And that brings us to the end of this week's episode. Pretty exciting to have kind of new products out there. I feel like we're starting to crack the door to these retail investors, as well as these other newer financial products, which is pretty exciting. I am the volatility guy. I'm the option guy. So I'll be pretty excited when we have some options to chains to look at. I think there's some interesting things that we can do there. But I guess I will wait a little bit longer for that SEC approval on the options chains. Hopefully it's nothing like the ETF approval that will just drag on and drag on and drag on. Hopefully we've finally set some set of precedents, and the derivatives are really just coming as, oh, yes, okay, well, they have this, here's a derivative if we've authorized the first product. I've never really looked into it, but I find it hard to believe why an SEC wouldn't approve a derivative product, because there's really nothing special or customizable about it. It's just a derivative of the original asset. So if that's there, why not allow the derivative to trade? But old Gary, he's not a Bitcoin fan yet. So even though he got all that tattoos done and everything to hype up the thing. So I suppose if feet dragging could be done, he'd be the guy to do it. And we'll see how that shakes out, because I know options world, especially when you get into the meme stuff, could get pretty interesting. Go look back at GameStop and AMC and some of that stuff, where options traders really kind of forced the movement of the underlying. So it'll be cool to see how that pans out. If you're not in that camp and you're in some other different camp, it's 2024, new year. Hopefully right opportunities are surfacing for you, and you've dialed into a trading strategy that works for yourself, and you're enjoying having fun out there in the markets. So like we always say, remember, think outside the block.